Let's talk now to Josie Anderson, Managing Economist at the Centre for Economics and Business Research in London. Josie, welcome to the programme. Well, the Bank of England rate decisions are the worst-kept secrets in London. No surprise, I guess. What's your reaction to their rise?
Yeah, we were expecting this rise today, with inflation standing nearly 4 times the Bank of England's 2% target at 7.9% in June. The Bank of England has to continue to increase interest rates to try and bring inflation back down to target. Of course, it was a slightly smaller increase than we saw in the previous meeting. And I think that's because actually in that data for June, we saw more of a deceleration in inflation than was broadly expected. And so inflation is moving in the right direction, but it's still got a long way to go. And so extra action was needed today.
Well, Bank of England's critics will say of this decision, of course, is groupthink. I mean, this is the 14th consecutive rise in interest rates. I mean, is there any sense that perhaps they don't know what they're doing?
I mean, it's a tough job at the moment because they've got to balance the extremely high inflation and bring that down. And the best way to do that is to increase interest rates, which is why they have been doing so. And to a certain extent, they're trying to bring economic activity down. Economic activity is very weak. It saw no growth in the 3 months to May. But of course, the Bank of England essentially actually does want growth in the long run. So walking that narrow path between crashing the economy but also bringing down inflation is quite tough. But it does need to tackle this inflation because if it stays high for a long, long time, that would be very bad for the UK economy in terms of an ongoing cost of living crisis, which we all want to end as soon as possible. So I think the Bank of England did need to take action, even though it's also done so for the previous 13 meetings.
For folks watching outside the country, just give us a sort of quick pen picture of how much harder life is inside the UK for households in these current economic circumstances.
Well, in terms of the effects of higher interest rates, it affects some people more than others. Obviously, people with savings actually see a higher return on those savings in terms of the interest. But people with mortgages, particularly those with large mortgages or other types of loans, will struggle. They are seeing, far higher costs if their fix ends on their mortgage, which means they can spend less on other goods and services, which lowers demand and ultimately should lower inflation. But for those people with mortgages and businesses which would like to borrow to invest, they can't engage in as much economic activity as they could, say, 2 years ago in terms of the amount they can get for their loan and the interest on their loan, facing higher payments. So for those people, life is pretty tough. Of course, all of these interest rate rises are to tackle the cost of living crisis, which is affecting nearly everyone in the UK because, we've all seen higher energy bills, higher food prices. But ultimately, we want to tackle the cost of living crisis with these higher interest rates, which are affecting some people more than others.
And no economist likes questions like this, I know, but how much longer is the pain going to go on for?
So we are, in fact, forecasting 2 more 25 basis point increases in interest rates from the Bank of England before the end of the year, taking it to a peak rate of 5.75%. So a bit more pain in terms of increases. And then today, actually, the Bank of England signalled that it would be willing to keep rates quite high for a sustained period, basically until they see inflation drop back to 2%. So in terms of those interest payments on things like mortgages and other types of loans, they could remain high for a while.
Josie, on that cheery note, good to talk to you. Thank you very much indeed for coming on the programme. Josie Anderson, Managing Economist at the Centre for Economics and Business Research in London.